I'm going to go over the one change I've made when trading fair value gaps that has not only improved me as an ICT trader, but better my understanding of order flow and bias. Make sure you guys watch till the end of the video, leave a like and comment on what you guys want to see next. Before we get into the video, make sure you guys are following me on Instagram. Lots of free education on the market maker model, as well as this is where you guys can reach me if you guys have any questions or want to talk to me direct. Alright, back to the video. When understanding fair value gaps, it's important to know that fair value gaps are simply an entry model. It's a way for you guys to get inside of the marketplace. It is not the one all be all. But before you take a trade inside of a fair value gap, you have to be aware of both context and narrative. Context is where are we at in price action and where have we been? Narrative is where are we currently going? When trading fair value gaps, you have to be aware of mainly narrative. Where are we going? You want to trade in direction of the bullish or bearish order flow, in the direction of bullish or bearish market structure. As well as you guys have to understand where you guys are, whether you guys are in a reversal market or a trending market. So in this case scenario, a lot of ICT traders, they probably see this bullish fair value gap and they're anticipating price action to come back down into this bullish fair value gap to then finding support here at this level. And let's see what happens. Those traders would have gone stopped out just now because they're not understanding of the narrative and order flow. We can clearly see that price action has just taken out liquidity, right? Liquidity is one of the things that I look for in price action because it can be a clear signal of a potential reversal happening in the marketplace. So when we have just taken out liquidity and we have a bullish or bearish fair value gap above it, I'm less likely to take that fair value gap trade because of the likelihood of that fair value gap failing is much more likely than if we didn't take out liquidity. So we can clearly see that price action has taken out liquidity here, as well as we can clearly see that there is a whole bunch of inefficiencies down here in the marketplace, right? Right now we have made higher and higher prices. Price action is not going to let these inefficiencies just stay here. It's most likely going to want to come back lower to then tag down into those inefficiencies. So in this case scenario, I wouldn't be looking for longs. Instead, I would then be looking for shorts for price action to reach back down into this level. And we have just taken out liquidity, which is another really good signature when we are anticipating a reversal to then take place. So in this case scenario, I would not have taken the longs inside this fair value gap. I would have been a little bit more patient, and then seeing the fair value gap then break, I would then look for the inversion, which is a bullish fair value gap broken turned resistance, or a bearish fair value gap broken turned support. So in this case scenario, I would mark out my 50% level, and then I would anticipate price action to come back up into this inversion fair value gap at the 50% level, stop loss just above here, and my take profit just down here at this bullish order block. So this would be the trade idea. Let's see how it plays out. Price action comes up, tags me in at that 50% level, and then we reach down into that bullish order block level just like so. So just knowing about the context and narrative of the market, we completely avoided this loss, but instead capitalized on the reversal inside of this inversion fair value gap setup. This is the one key that I've used that really improved my trading. Coming down into Euro JPY, you guys see this bearish fair value gap here, and probably most ICG traders would probably think price action is going to come back up into this bearish fair value gap, find resistance, and then drop to the downside, maybe taking out this liquidity pool. But they are unaware of the overall order flow of the marketplace. The order flow of the marketplace and the direction of the marketplace for Euro JPY has been higher prices. Price action has shown massive amounts of support at bullish areas rather than bearish levels. Not only that, but we have taken out liquidity down here, as well as we have tapped into this M15 bullish order block. So not only have we then taken out liquidity from the Asia session, but we have also tapped into a support level, meaning as price action comes up into this bearish fair value gap, I'm going to be a lot more patient at the fair value gap. Instead of putting a limit order here, I'm going to be a lot more patient in seeing how this price action react inside of it. If price action tends to consolidate and not really move lower from it, then I'm going to invalidate this fair value gap and most likely look for a long entry back up into these highs. So let's see how this then plays out. Price action pushes higher, we get inside of the bearish fair value gap. I'm not looking to take a short yet, I'm being a little bit more patient. Price action then consolidates a little bit, and then we create this bullish fair value gap. Okay, seeing price action create this bullish fair value gap and then finding support inside of it, I'm then looking to take a long here. Stop loss down here, probably targeting these highs here, right? Because we understand the marketplace is not finding respect inside of this bearish fair value gap, but instead disrespecting it and most likely wants to continue going higher. Price action then rips up to the upside, we got our win, and then most ICT traders who see this bearish fair value gap as a resistance level to go lower, they would have lost this trade. But since we understand order flow in the direction of the marketplace, and we see price action has taken out this liquidity pool plus tapped into this bullish level, we then invalidate this fair value gap, wait for the right confirmation, see the right confirmation inside this bullish fair value gap, and then take the longs back up into this liquidity pool, which it ended up reaching for a 2-to-1 in total, but we got out at a 1-to-1 just in case. Coming down into the marketplace here for GBP JPY, we can clearly see the overall order flow of the marketplace has been seeking higher and higher prices, finding major support at support levels and overall breaking above resistance levels. So order flow of the marketplace is pushing higher, as well as we have just tapped into this bullish M15 order block. So price action inside of this bearish fair value gap, I'm less likely to trust this bearish fair value gap and most likely would want to see price action break above it, potentially inverse for that continuation to the upside. We can clearly see price action breaks above that bearish fair value gap in total, comes back down into that bearish fair value gap, then inverses it. We can then take our long here, stop loss just down here, and then we can target the 2-to-1 at these highs, which price action eventually tags into our target, right? It's understanding narrative of the marketplace, it's understanding order flow, right? Not taking every trade idea inside of every fair value gap, but understanding where are we going inside of the marketplace and acting accordingly. Instead of taking a short here as it came up into the bearish fair value gap, yes, it is a bearish fair value gap, but the order flow of the marketplace is not seeking bearish prices. Why would I take a bearish fair value gap entry when the marketplace wants to go higher? It's understanding the algorithm and where it wants to go and where it's most likely to favor. Price in this situation favors the upper level, right? It favors buy side liquidity, it favors higher prices a lot more than lower prices, so it's going to respect and be more favorable to bullish levels. So seeing this bearish level here, I'm anticipating it to then get broken, inverse, get in on that inversement to then take the longs for a 2-to-1 or maybe 3-to-1 up above my targets. Hopefully you guys got a lot out of this video. These are some of the little tweaks that you have to make as an ICT trader when understanding order flow in the direction of the marketplace, right? Not every bearish PD array is going to hold, not every bullish PD array is going to hold. You guys have to understand the context and the narrative. Where has price been, where is it at, and where is it going next, and then act accordingly. I have recently launched my private mentorship here. First, we have the Market Maker Mastery for $15 a month, which gives you guys access to the Market Maker course, access to my pre-market analysis, post-market analysis, as well as trade breakdowns around the Market Maker model, as well as a private community for all members. Then we have the Academy here, which gives you guys access to beginner and advanced lessons, pre-market analysis, live trading, post-market analysis, and trade breakdowns as well. And you guys get access to my live trading for Forex and the index markets every single morning. Plus, we have psychology lessons and my full risk management and trade management plan. Then we have access to all my market maker models and daily teachings of the market maker model. Then again, with the market maker mastery, you guys do get access to the private community. Last but not least, we do have access to the Arkham seat at the table, which is weekly Zoom calls, answering your questions, backtesting with members, forecasting the marketplace, as well as psychology podcasts and teachings, advanced topics not taught anywhere else, learned from me, as well as this is only limited to 50 members. If that's something you guys are interested in, it'll be the first link in bio, as well as it'll be the first link in my Instagram bio as well. All right.